Let's start with interest rates, because we've had months of central bankers preparing us for the idea of rates moving slowly and incrementally higher. But at least for the moment, they're staying where they've been for the last 6 years or over that, just under 0.5%. This is now the longest period of time that rates have been on hold since Clement Attlee was Prime Minister in the 40s. The decision comes at a time of growing concerns over the state of the global economy. The US Federal Reserve was widely expected to raise rates before the end of this year, but analysts are now openly questioning that outlook because of a slowdown in the US and elsewhere. Micah Curry is the Associate Investment Director at Fidelity Worldwide Investment, and she joins us now. Looking at some of these numbers, we've had exceptionally low levels of inflation, and that's been a real boon to household finances. But I wonder whether you think that we're getting a little bit too comfortable with the idea of cheap prices and cheap credit.
That's right, Victoria. The big concern, and that's why one of the 9 members of the Monetary Policy Committee, Ian McCafferty, has voted in favour of interest rates increasing, is because he says the fact that inflation is low is down to oil prices, but that is a temporary thing. And once that changes, we could very well see ourselves going from a low inflation environment to a high one, which surpasses the Bank of England's target inflation rate of 2%, even though what we have at the moment is very much low inflation.
Yes, you mentioned it there. We've got zero inflation. The target is 2%. The bank doesn't think it's going to reach at least half its target until next spring. Is the bank doing its job?
Well, the Bank of England doesn't want to risk the global recovery by raising interest rates too soon. And interest rates, after all, is the tool they use to control inflation. Now, with inflation in non-existence, there's no need to use that tool. The question is, when will interest rates rise? And most people are predicting the first quarter of next year. But for now, I'm afraid rates will stay lower for longer. Good news for borrowers, bad news for savers.
The committee was a little bit more sanguine when it comes to the state of the UK economy. They're noting that income and consumption growth remain strong. However, this assessment seems to be a little bit at odds with some of the data we've seen coming out of private surveys. Is the bank being perhaps a little bit too optimistic about the future of the economy here?
Well, the UK recovery remains on track, but there are global concerns, and the big concern really is the slowdown in China, the slowdown in emerging markets, and of course last week we saw employment figures out of the US which really disappointed. So there are a lot of question marks over the strength of the global recovery, and I'm sure the Bank of England is keeping a close eye on that.
Micah Curry, thank you very much. We're going to be, of course, keeping in with the interest rates, as we do every single month. Let's have a quick look at some of the other stories we're